Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code Blockchain DXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and FinTech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and FinTech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbor. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and FinTech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbor. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
All right, welcome back to the Deep Dive. Today we're plunging into the dynamic and, well, let's face it, ever-evolving world of cryptocurrency and blockchain.
It certainly keeps us on our toes.
Doesn't it just? So our mission here, custom tailored for you, is to really extract the most vital insights, maybe some surprising facts, from a fresh stack of sources we've got. We'll be zeroing in on the latest market movements, some pretty significant technological advancements, and some intriguing regional shifts, too, especially what's happening in the Middle East.
And these sources, they give us a really illuminating snapshot from July 23, 2024. You can see both subtle shifts and some, well, frankly, monumental moves across the digital asset landscape.
Yeah.
So we're here to connect those dots for you and explore what it all really means for the bigger picture.
Okay, so to kick things off then, let's get a feel for the market's current pulse.
Yeah.
Bitcoin saw an increase. Marginal, but still an increase over the last 24 hours.
Right.
And the market sentiment, it's firmly in greed territory. Reading 70 on the index, up from 67 just yesterday.
And for anyone new to that, it's a 0 to 100 scale, right? So 70 is showing quite a bit of, well, greed or maybe just bullishness in the market, often a sign of aggressive buying.
Exactly.
What truly stands out for me in these numbers, though, is the surge in stablecoin volume. That's unequivocally a positive indicator, shows liquidity.
Yeah, good health sign. And beyond that, the total crypto market cap, it's impressively crossed the $4 trillion mark, now sitting at about $4.02 trillion.
Wow, $4 trillion.
But here's where, for me, it gets really interesting. Decentralized exchange, DEX, volume.
Ah, yes.
For the first time in almost 4 years, it vaulted past the $20 billion mark, hit $20.46 billion.
That's huge.
And what's striking is the fees. For a big chunk of this, like $9.46 billion in transactions, the total fees were less than 1%. Pretty efficient.
That is efficient, and it begs the question, doesn't it? What does a DX dominance of over 50% tell us? Especially when, centralized exchanges probably still handle a good chunk, maybe 30, 40%.
What's the signal there?
To me, it points to a maturing market. Decentralized platforms are gaining serious traction. People are trusting them as liquidity hubs.
And the leaders really show that. PancakeSwap is way out front with $6.223 billion in 24-hour volume.
Yeah, followed by Uniswap at $4.34 billion. Then you've got Radium G, Orca, Aerodrome, all doing significant volume.
And driving a lot of this, as always, are the stablecoins. Tether USDT still leads, $136 billion in volume, though its dominance slipped a bit to just under 62%.
And Circle's USDC picked up some pace, $15.28 billion. FDUSD holding third at $10.2 billion. It's a dynamic space.
Definitely.
So connecting this back, Bitcoin's dominance saw a recent pump up to 60.9%. Meanwhile, Ethereum's dominance has been picking up pace too, now at 11.42%.
And the trading volumes reflect that focus. Bitcoin saw $74 billion, Ethereum $39.86 billion.
Although, interestingly, Ethereum's market cap actually went down slightly in the last 24 hours to $446 billion.
Oh, that's curious.
But it's still up almost 17% over the last 7 days, so short-term dip, maybe. Bitcoin's cap, for context, is $2.35 trillion.
So what does all this ultimately tell you, the listener? These figures, they don't just show growth. They're signaling, I think, a pretty profound shift in how liquidity is being processed.
Yeah, a growing trust in decentralized infrastructure. It's a snapshot of a crypto ecosystem that's not just expanding, but really evolving in its core structure.
Okay, moving on from the market's pulse. There's some big institutional news shaping expectations. NASDAQ submitted an SEC filing for BlackRock's Ethereum ETF, ticker's ETHA.
Right, and this follows ETHA already seeing nearly $500 million in daily inflows. That's been boosting Ethereum's TVL, the total value locked, quite significantly.
But the really striking part, I think, is BlackRock's intention.
Yeah.
They want to update this ETF to include staking as a service.
That's the kicker. Because if you remember, the Biden administration approved an Ethereum ETF earlier, but explicitly prohibited using the funds for staking.
Exactly. So this is a direct challenge, or maybe an evolution of that stance.
It could fundamentally alter how institutions invest in Ethereum.
And the deeper implications, I mean, if BlackRock actually gets this approved, the staking part,
Yeah.
it would undeniably impact Ethereum's price, right? And pump the TVL even more.
Oh, for sure.
But here's my question. If institutions are just buying ETH to stake it, for the rewards,
Yeah.
does that necessarily improve the actual use of the network? Like transaction numbers?
That's a critical question, because our sources describe current Ethereum transaction numbers as, well, the word used was absolutely dreadful.
Ouch.
So yeah, it could certainly drive accumulation for balance sheets, firms setting up essentially an Ethereum treasury, but it doesn't automatically mean more transactions.
Yeah, you could have a scenario where they just buy ETH to become validators, earn yield.
Rather than using it for, say, DeFi applications or payments or other network activities, yeah.
So what this means for you is that this BlackRock move, it isn't just another ETF product. It's potentially reshaping how big money interacts with Ethereum's core mechanics.
Right. It sets up this fascinating tension. Is it about driving network usage? Or is it just about accumulating assets for staking rewards? Something to watch.
Definitely. Okay, shifting gears again. Let's unpack this intriguing story about SpaceX. It really highlights the transparency of crypto.
Ah, the Bitcoin shuffle, yes.
So Arkham Intelligence spotted SpaceX moving 1,388 Bitcoin. That's roughly $153 million worth. And these coins hadn't moved for nearly 3 years.
Dormant for a long time.
And this is where Bitcoin's public ledger shines, right?
Absolutely. It's one of its strongest pillars. We can publicly verify every single transaction.
So because of that transparency, we know SpaceX did not sell these coins. They were transferred, yes, but not sent to an exchange address associated with selling.
Exactly. Arkham Intelligence dug into it and confirmed SpaceX still holds a pretty hefty stash. 6,977 Bitcoin, about $823 million across various wallets linked to the company.
Okay, so if it's not a sell-off after 3 years,
Yeah.
what are the likely scenarios? Why move such a big chunk now?
Well, there are several possibilities, all quite plausible for a large organization.
Like what? Security.
That's one. Enhanced security measures, maybe migrating funds to more robust cold storage. Could be moving from an old hardware wallet to a newer multi-sig setup, something more complex and secure.
Makes sense. Or maybe just internal housekeeping.
That's another strong contender. Internal wallet management or restructuring. Large firms often consolidate or redistribute funds, for accounting, auditing, operational clarity. Doesn't mean they're selling.
Okay. Well,
Could be a change in their custody provider. Maybe they switch to who holds their Bitcoin or move to a new self-custody solution based on updated policies.
right, news service provider.
Or they might simply be preparing for future transactions, moving funds in advance for, say, operational needs, maybe collateral for something, or some other strategic move down the line.
Getting their ducks in a row.
Exactly. And finally, it could just be routine maintenance. After 3 years, maybe it's just time to refresh the wallet infrastructure, rotate the cryptographic keys, test access, basic security hygiene for long-term holdings.
So what this ultimately reveals for you, the listener, is just how complex managing large digital asset holdings can be, operationally speaking.
And more importantly, it really reinforces the power of that blockchain transparency. It lets us analyze these big moves and try to discern the intent behind them, which is something you often can't do in traditional finance.
Very true. Okay, now let's look inside the Ethereum ecosystem itself. There's a bit of a tug-of-war happening with validators.
Ah, the staking queues, yes.
The execute validators wanting to withdraw their staked ETH. It swelled to over 519,000 Ether. That's about $1.9 billion.
Wow, that's the largest it's been since January 2024.
Yeah, and it's stretched the waiting time to get your ETH back to about 9 days now.
So why are they exiting? What's the main driver?
Well, the sources point primarily to profit-taking. Ethereum's price, as we mentioned, has pumped over 160% since April.
Right.
So a lot of people who staked their ETH when prices were much lower are now seeing a chance to unstake and cash in on those gains. It's a pretty natural market cycle.
Makes sense. You lock it up, price goes way up, you take some profit.
But here's the other side of the coin, the really interesting dynamic.
Yeah.
Despite that big exit queue, there's also a significant entry queue.
Oh, people wanting to start staking.
Exactly. 357,000 Ethereum waiting to get in. And the wait time to enter is much shorter, only about 6 days.
Okay, so exits are high, but entries are pretty strong too. What does that dynamic tell us about Ethereum's long-term health?
Well, it clearly shows there's still persistent, strong long-term interest in staking Ethereum.
Yeah, the demand is still there, partly driven by the rising price, maybe attracting new stakers.
Partly that, but also, critically, remember the U.S. SEC clarified back in May that staking in itself doesn't violate security laws.
Ah, right. That likely boosted investor confidence quite a bit, removed some regulatory overhang.
Definitely. And we're seeing some big players accumulating ETH, maybe partly for staking, like Charlene Gaming, apparently holding $1.38 billion in Ether.
Which, interestingly, our sources note is more than the Ethereum Foundation itself holds.
Yeah. So the key takeaway here for you is, while you might see some short-term selling pressure from these profit takers exiting,
The strong demand to enter staking, plus that growing institutional confidence, especially with news like the BlackRock ETF possibly adding staking.
it paints a largely positive picture for the long-term health of Ethereum's staking ecosystem, wouldn't you say?
I would. It suggests the underlying belief in the network's future is still very much intact. Keep an eye on that total value locked over the next, say, 15 days. That should give some clues about near-term price direction.
Good advice. Okay, let's shift focus one more time to NFTs. There's been some renewed buzz lately.
Ah, yes, the JPEGs are moving again.
Seems like it, at least some of them. CryptoPunks are leading the charge. They drove over half of Sunday's Ethereum NFT volume, like $26 million.
Wow, just the punks.
Mostly. And their floor price jumped 20% up to around $177,000.
That's a significant move for the punks. Any others?
Yeah, other sort of blue chip collections saw bumps too. Pudgy Penguins, Mutant Ape Yacht Club on Ethereum. And over on Solana, Mad Labs and Corner Scores also saw sharp increases.
Okay, so some activity across the board in the higher-end collections. And overall sales volume.
Ethereum NFT sales climbed 50%, hit $105 million recently.
Okay, 50% increase, that sounds substantial. But does this really signal a revived interest, like a new bull run for NFTs, or is it just a temporary spike?
That's the million-dollar question, isn't it? Because, these prices and activity levels, they're still way, way lower than the peaks we saw in 2022 and 2023.
Right. Context is crucial here. It's a jump, but from a much lower base.
And here's where things get particularly tricky, and this is a really critical nugget of knowledge for you listening. Yeah. Be extremely careful with NFT market capitalization figures. Market cap.
Oh, yes. This is important.
Our sources flat out state it's extremely easy to manipulate this data.
How so?
Well, issuers, or even just holders, can artificially inflate the floor price of a collection, maybe through wash trading or just controlling the supply listed.
And then they just multiply that potentially inflated floor price by the total supply of the NFTs.
Exactly. And boom, you get a huge market cap number that makes the collection look like a top project, which they can then market to less savvy investors.
So the advice from the source is pretty blunt. Often it's best to go and completely dismiss NFT market cap rankings.
Pretty much. You have to dig deeper than just that headline number.
So with that huge grain of salt, what are the top 5 NFT collections by this potentially manipulated market cap? Filtering for ones with actual recent sales, of course.
Right. Based on that filter, CryptoPunks are number 1 at $614.5 million. Then Pudgy Penguins at $390 million. Bored Ape Yacht Club, $343 million. Liberty Kaz, $176 million. And Retardio Cousins at $163 million.
Okay, so punks, penguins, apes still dominating those rankings, even with the caveats.
So translating this into action for you. Yes, there are some early signs of renewed interest, liquidity flowing back into those established blue-chip NFTs.
But it really looks more like a temporary hike for now.
Agreed. To really gauge if this is a sustained resurgence, you'd want to see consistent week-over-week sales increases, not just a weekend spike.
Right. Across multiple chains like Ethereum and Solana, and maybe seeing some genuinely new collections gaining traction organically.
And maybe deeper integrations, like NFTs being used more in gaming or linked to real-world assets. That could signal real utility growth.
Definitely. And above all, keep that critical eye on those market cap numbers. Don't take them at face value.
Wise words. Okay, for our final segment, let's explore some really fascinating developments happening regionally, particularly innovation coming out of the Middle East. This is broader than just crypto markets.
Interesting shift. What have we got?
First up, something potentially big for U.S. users. Telegram's Ton wallet is now live in the United States. You can access it right inside the Telegram app.
Ah, TON making moves in the U.S. What features does it offer?
Quite a few, actually. Buying and trading USDT, TON itself, and apparently hundreds of other tokens.
Okay.
Instant crypto, sending via Telegram direct messages, which is pretty slick.
Yeah, that integration is key.
Also, 0% fees for converting dollars to crypto, direct withdrawals back to credit cards, and even ways to earn passive income by holding certain tokens in the wallet.
Wow, that's a pretty comprehensive offering. It's curious, though. The source notes these features aren't available yet in the UAE.
Yeah, interesting geographical distinction there, maybe rolling out region by region.
Could be. Okay, what else from the Middle East?
Next, over in Abu Dhabi, a significant rebranding. A company called Blockchain Group has become Capital B.
Capital B. Okay.
And this marks a pretty major milestone. They're billing themselves as Europe's first Bitcoin treasury company.
Bitcoin treasury company. What's their focus?
Explicitly on increasing Bitcoin per share growth. So accumulating Bitcoin on their balance sheet for shareholder value, similar to what MicroStrategy does, perhaps.
Ah, okay. The corporate Bitcoin playbook.
And they've announced they're setting up a subsidiary right there in Abu Dhabi to support their internal growth. So a European company expanding into the UAE.
Interesting. This raises the question, doesn't it? Will other firms follow suit? Maybe even expand beyond Bitcoin? Could we see corporate Ethereum treasuries or, dare I say, Dogecoin treasuries?
Well, maybe. Capital B's new website is apparently going to have a data analytics dashboard to showcase their strategy. And their subsidiaries cover data intelligence, AI, and decentralized tech consulting, so they're pretty diversified.
Sounds like a strategic move, positioning themselves at the intersection of traditional finance, Bitcoin, and tech consulting in a growing hub like Abu Dhabi.
Exactly. And finally, staying in the region, let's unpack Saudi Arabia's incredibly ambitious push to become a global AI powerhouse. This is being driven by a company called Umain.
Umain, backed by the Saudi Public Infrastructure Fund, the PIF.
That's the one. Umain is central to Crown Prince Mohammed bin Salman's Vision 2030 strategy. Their aim is to be global first, but sovereign by design.
Sovereign by design. What does that mean in practice?
It means focusing on building AI infrastructure within Saudi Arabia, developing Arabic large language models, LLMs, the tech behind things like ChatGPT, and offering cloud services, all while maintaining control over data.
So building local capacity and keeping data sovereign, that's a common theme globally now. How are they doing?
What's fascinating is the speed. Umain apparently launched just 2 months ago, back in May 2025.
Just launched.
Yeah. And they've already signed deals worth $23 billion.
$23 billion. With who?
with the big tech giants, NVIDIA, AMD, AWS, Qualcomm.
Wow. Okay, they are not messing around. That's serious investment in hardware and cloud partnerships.
Absolutely. It underscores their commitment to building data centers in Saudi Arabia for local data storage and processing. That sovereign data protection piece is clearly crucial for them.
National digital independence, essentially.
But here's where it gets really interesting, I think, from a technological and cultural perspective. Umain's focus on Arabic LLMs.
Tailored for the region.
Exactly. Tailored specifically for Middle Eastern language nuances and, crucially, cultural context.
That's vital. It's not just about translating content from English or other languages.
Right. The source emphasizes that localized generative AI content must respect cultural context deeply. Otherwise, you risk misrepresentation or creating content that just doesn't resonate or feels alien.
So it's about building AI that understands and reflects the local culture, not just imposes a global model.
Precisely. And this raises a bigger question. How will this focus on culturally relevant AI built locally reshape the global AI landscape?
It's a powerful counterpoint to the idea of globally uniform AI, isn't it? Umain's goal, I say, is to transform marketing and AI by making technology culturally relevant and locally built, but for the world.
It's a really interesting model for digital transformation, embedding that local identity right into the tech stack.
Definitely. So what you should consider from all this is how different regions aren't just adopting blockchain and AI.
They're actively shaping it, often with unique cultural priorities and strategic goals that go way beyond just the tech itself. It's not a one-size-fits-all future.
A very important point.
Phew. What an incredible deep dive today. We've covered a lot of ground.
We certainly have.
Navigated the crypto market pulse, unpacked BlackRock's potential game changer with Ethereum staking, deciphered that SpaceX Bitcoin move, looked at the ins and outs of Ethereum's validator queues.
We also touched on the flickering flame of NFTs, the importance of skepticism there, and saw how the Middle East is really carving out its own unique space in both blockchain and AI.
Our mission, as always, was to cut through the noise, extract those key nuggets of knowledge from all this source material, connect the dots for you,
and hopefully offer you a valuable shortcut to being truly well-informed in this fast-moving space.
So, as you reflect on everything we've discussed today, here's a final provocative thought for you to mull over. In a world where digital assets and AI are becoming increasingly intertwined, what new forms of treasury, beyond just Bitcoin or Ethereum held by companies, might emerge in the next, say, 12 months?
Ooh, interesting. Like what? Data as a treasury asset, AI models.
Could be. And how will those distinct regional cultural nuances, like the ones we saw emerging in the Middle East, continue to shape how these new digital assets or AI-driven assets are adopted, valued, and ultimately impact the world?
That's a great question to ponder. The intersection of culture, tech, and value is only going to get more complex.
Something to think about. Thanks for joining us on The Deep Dive.